Guys, good Wednesday morning. I'm Jerry Miller, and welcome to Real Talk with Keith Smith. Thank you kindly for joining us. This show today presented by our good buddy, Scott Morris of Ross Mortgage. If you need somebody to get you to the finish line, give our friend Scott Morris a call at Ross Mortgage. He's on vacation. So's the star of the program, Keith Smith. I haven't seen him in a couple weeks. But don't worry. We got two dudes here that are going to carry the show and maybe make it even better. This guy's a rising star in households across Central Virginia. His name is Jeremy Rowe. This guy's a known commodity in households across Central Virginia. His name is Taylor Averitte. Boys, welcome to the program. I love today's show already. How are you?
Doing very well. Thank you for having us.
We were joking off air, and folks are putting in the feed, who are the tallest agents in Carr? We have somewhere between, now not all the agents are doing this full time. Some are hobbyist agents. Somewhere between 1,200 and 1,500 folks in Carr, depending on the day. Taylor Averitte on set, maybe the second tallest one, and he's competing for best dress. His competitor, Matt Neese, is watching right now, and he might be sharper dressed than Taylor Averitte. How are you, my friend? Where do you want to go anywhere on this show today?
Yeah, I'm doing great. I mean, we can talk about the market if you want to, a little bit, a quick market update.
Yeah.
I have a new metric for market update. It's home inspection rates.
Oh.
I met with a home inspector this morning. He told me he does about 4 inspections per week, hasn't done an inspection in the city limits in about 3 weeks. So what that's saying is that supply is down, and what it's also saying is that demand is really high for that supply, because people are waiving their inspections to win if they do get a contract, and there's just not enough houses out there for purchasers to have the power to have home inspections.
That's a great metric. Did you ask him other jurisdictions?
The counties have a higher rate of inspection than the surrounding counties do for sure.
But more inventory there.
More inventory and also less demand. Relative less demand.
Market update for you, my friend. Jeremy, what are you seeing? What's the temperature?
Yeah, no, I haven't seen a whole lot change since I was on the show last week. It's still been very busy, still getting a lot of inquiries from homes that are going under contract, which is a good thing. That's always a positive sign. New leads coming in from new home closings. It is interesting that's a great new metric to kind of look at, Taylor. I was doing a presentation yesterday over at Keller Williams to agents helping out helping out realtors by understanding homeowners insurance and what they need to look for as they're looking at homes for their buyers. And one of the things that I always encourage is to get a home inspection done. I don't care if it's for informational purposes only. People need to know what they're buying. And there's different ways you can write contingencies in with a home inspection. One of the most popular things that I've seen now is that the home inspection is going to be for informational purposes unless one item is more than, say, $5,000 worth of repairs, so that you're not, nitpicking over little things or cosmetic things when it comes to doing this. But the value of having the home inspection is critical, because most insurance companies also do a home inspection. They want to come out and take a look at it, whether they're coming by and just taking photos or if they're looking to see what type of plumbing or electrical work is in the home. And sometimes people are surprised if they're like, the insurance company wants me to get a home inspection or wants me to fix some things on my home. But the insurance company is taking on the risk of insuring this investment. And so if you're paying $500,000, $600,000, $700,000 for a home, you should really know what you're getting, even if you're not asking the seller to do anything.
I agree.
I like it.
$450, $600.
How are you seeing the home inspection contingency or non-contingency being utilized in deals today? We are hearing from many people, it's such a competitive market, they're waived altogether. This man's a reasonable guy. He's saying at least do some due diligence. I myself cannot, now we're fortunate in that we own a house here. I could not buy a house without a home inspection. I just could not do it. But I understand some people are doing it. What are you seeing?
Well, there's a few options that you have. I'd say the first option is if you know when you're going to go through the house and you have a trusted and your agent has a large group of home inspectors that they trust that they can ask, where maybe a short-term scheduling wouldn't be a problem, you can do a walk and talk. So you cannot get a home inspection report. It can't be a full inspection. But you can take a home inspector with you through the house for a nominal fee, to do essentially a visual inspection to give you an idea of how things look at while you're previewing the house with your agent prior to putting in an offer. That's a great way to kind of hedge your bet, to get some comfort, but to also completely waive your contingency when you make that offer. Some sellers may not really care for it, but it is what it is. It probably will cost you $100. So the consideration as a buyer is, I have to really want this think I'm going to want this house. You can't just spend $100 every time you go look at a house if you're one of those serial tourists looking at 10 houses a week.
That's going to add up.
Yeah, that's going to add up quick. A home inspection document has a few sections. You have a Section A is a period to have a section. Section B is a period to negotiate repairs, and Section C is a termination period. You can assign different values to those. Having a quicker turnaround in Section A, instead of the traditional 14-day inspection period, having a 5-day inspection period. Having your agent call an inspector prior to making the offer to see their availability, to know, okay, I'm making this offer on Monday. I can get an inspection by Wednesday, so I can make this a 2-day turnaround of that contract. And already locking that in is extremely valuable instead of leaving it open air to a seller who's going to take the burden of that uncertainty for a 10-day period. If you want to have an informational purposes on the inspection, even if you're going to waive your contingency, because having an informational purposes only inspection could still give you the right to retain a contingency, kind of like Jeremy was talking about, where, okay, I'm going to get out if I find a nuclear bomb buried under this house, but otherwise I'm good. You have to write in that contract that you retain a contingency. If you want to have an inspection for informational purposes only while you're under contract, but you're willing to waive your contingency, make sure that you put the verbiage in there, I'm waiving a contingency, but I would still like to have an inspection. Otherwise, a seller is not under any obligation to let you walk through with anybody to look at the house. And I've had clients who people waived their contingency and didn't include the verbiage in the contract, and they said, well, we'd still like to have an inspector come do for our edification, our own edification. And he said, you're more than welcome to the day after closing.
That's what he said?
Yeah.
Yeah, which you can't blame him.
Can't blame him. And he's an attorney, so.
Yeah, he knew how to play the game.
He knows how to play the game.
He knew how to play the game. You can't blame him for that.
Yeah.
Follow-up question to you on this.
Yeah.
The home inspections where it's a contingency up to a certain threshold, is the seller going to see that as a potential roadblock in a multiple offer scenario?
It could. I've actually heard of that
because that's
happening.
an out for the buyer.
It is
potentially.
Out. I've heard of it actually being a lose-lose.
Explain that.
You're going to have to forgive me because I'm a little foggy on the details. But something had to be repaired, I believe, based on the appraisal, or there was an issue that came up. I think they had a $2,500 threshold, and something was $2,000. So it was painful for both parties involved, and it became a real issue. And I believe that it had to be repaired, but the seller didn't want to repair it because of the verbiage in the contract, and the buyer didn't want to repair it, couldn't repair it because they're under contract and not going to improve a home they don't own. And forgive, I'm foggy on the details of this, but yes, it can be an issue when things like that come along.
And the ones that I've seen that have been the most successful, normally the amount of the out is basically setting it to, it is going to be, if you say like $5,000 or $10,000, you're basically saying if the foundation of this home is like crumbling. So
it's not nominal.
Like, so it is, when you're in like the lower limits there, like $1,000 or $2,000, it becomes, there's a lot grayer area. As you go to the extremes, it's going to get more black and white. So if you set it at like $10,000, you're basically looking at the foundation is crumbling, or like termites have eaten out this entire home, and I need to get out of this contract. It can lose in a multiple offer situation, but it's also generally a stronger way that you're still protecting your buyer if you do something like that, in case there is something that is, and unfortunately on the home insurance side, I have seen instances where people have bought homes without the home inspection, and it is Tom Hanks, the money pit.
Tell us, give us the horror story, without names and places.
Sure. No, it was a beautiful, brick home. It looked really great. The photos looked fantastic of it, of the home. And after they moved in, they noticed an area where the roof might have been leaking a little bit. And so they dug into that area, and after peeling off some drywall, they noticed that water had gone all the way through the walls and down into the foundation, and there was black mold throughout the entire area. One of the headers had rotted and needed to get replaced, and somewhere around $45,000 later, the house was starting to get back to what they had originally thought that they were in. So I mean, it's a great example on just if you have a budget for what you're looking to buy for a home, and if you know that you're going to need to invest, to put some money in for repairs, at least you're mentally prepared for that.
And remember that Virginia is a buyer due diligence state.
It is.
Sellers don't have to make any disclosures unless they actively know of active material defects.
Mm-hmm.
So,
How does that work with the agent?
If the agent finds out, then they have to disclose.
Right, I know you guys do, but
Yeah.
how would the agent find out? Is that where the agent goes in and is not asking too many questions?
It can be.
Yeah.
Yeah, it's like there's times when lenders are also like, wait, don't tell me.
Yeah.
And agents are like that too from time to time. I've heard of agents walking through houses and spotting things and saying, darn, I've got to talk to my client about this now. But yes.
Of their current listing? The agent's listing?
Yeah.
Dang.
Yeah. So it's, if the agent finds out, then they have to make the client aware and then it has to be disclosed. But, in that case, there's probably culpable deniability from the seller and
It had been an investment property, so they hadn't even
They
lived
don't
in the
even
home,
know.
so they didn't even know.
And I tell people all the time, this watermark on the ceiling, if it's not disclosed legally, is indicative that this is a remediated issue. And so you can see evidence of former problems that maybe they haven't painted over. And if they haven't disclosed it, that's supposed to indicate not an active problem, but the evidence still remains. So, it becomes is this actually active? Are they not disclosing this? An inspection seems like more necessary now than maybe before. It can really put a buyer in a tailspin, especially when it's a seller's market like this.
I see the wheels turning. You want to add something? Go next topic.
Yeah, well, I was thinking about it from an insurance standpoint, because whenever I'm doing a new home, I run something called a clue report, which is basically it looks at any claims history over the last 7 years. And in those examples too, if it's a problem that happened, normally if it's an insurance claim, then the insurance paid and something got fixed. Mm-hmm. But you could be buying a home and I could look at the history of the home and it had $43,000 worth of water damage that was repaired on the home. It does not have to be disclosed. Mm-hmm. But that's something that I see that comes up.
This is a real spinner for people from states like California.
Which is different.
Mm-hmm. Which from what I understand is like extreme disclosure state. And so they come here and then they are completely uncomfortable with the lack of disclosures made and the lack of information available about each house. Your agent may not know the ages of things like HVACs, roofs, when the last time something happened, because the person that bought it was existing, they weren't told from that seller, and then they have no idea now because there's not these large disclosure packages.
Which is another good reason to get a home inspection,
right.
because the home inspector is used to looking at these things, and he can help you tell those things.
Right.
So we got on home inspections with Taylor's metric. I think it's a darn good one. Home inspectors doing work. He said in the city, normally he's doing the inspector, his colleague, 4. Now it's down to 1. I'm going to throw this to you on the whole supply chain of real estate, and we're on this supply chain of real estate here as well. I mean, Real Talk is 3 times a week. We have sponsors tied to real estate on this show here. On the supply chain of real estate in Central Virginia, which profession is doing the best and maybe most protected from a 30% down inventory market year over year, and which one on that supply chain is most challenged? Is it the home inspector, no inventory and inspections being waived? Is it the appraiser? I mean, a lot of appraisers don't have a ton of work right now either. Show's yours on that topic.
I think the home inspector is probably the most downstream there. Probably doing the best is the well-established real estate agent. The second best would be the loan originator, because they are
essential.
They are essential to some transactions. The real estate agent can clean up on both cash transactions and finance transactions. It's the opposite. The mortgage loan officer was doing great when the rates were low because they could clean up on new purchases and refinances. Their refinance activity is dried up, and now the real estate agent is the one that can double dip between cash and mortgages. Cash offers and financed offers both are probably, like if you say, well, 50% of financed offers are waiving their inspection, then the inspector is downstream from that. So I think the inspectors are probably seeing the largest hit, and they're really trying to pivot themselves or position themselves in these walk-in talks or get the inspection anyway. That's the talking point when I talk to inspectors. Oh, I'm available to do a walk-in talk for $100. Or make sure you tell your clients that they don't want to be ignorant about what's going on in their house. The day after closing, I'll be there to do their inspection for their own edification. So, that's what I'm seeing.
I see it. What do you say?
I think so too. I was thinking through just that titration right now. We are seeing there's a lot of cash out there. It's kind of surprising, and like at all price point levels too. It's not just the investment, the sub 250, if there is a sub 250 market right now.
Where's the sub 250 market? Is that Buckingham?
It probably. I mean, I ran numbers.
Hessian Hills, Turtle Creek, Villas at Southern Ridge.
Yeah.
I ran numbers over in Augusta County maybe 2 weeks ago, and I think the number of properties that were 3-bedroom, 2 full bath under 250, there might have been 6, or there might have been 8, but probably 4 of them were manufactured homes, double wides trailers. There's not a lot out there.
No.
But the cash buyers, I mean, I've seen $550,000 cash offers, on some properties and everything right now.
Where's the cash coming from? Out of market? In market?
I would say a lot of it is probably coming from out of market.
My cash clients are all out of market.
Yeah.
And what is it? They sold Georgetown townhome, DC, Northern Virginia townhome, 1.4, 1.5, come down with the bag of money?
Some of them, or they sold companies and just have a bag of money not related to other real estate.
Why move here? UVA ties?
Some people are buying properties for their children.
Oh, wow.
And advanced schools at UVA.
Good Lord.
Because rents are so high and not proximate.
You got clients that are doing that?
Yeah.
frequently.
My colleague Brad Pitt, I think, Brad Pitt with Keller Williams.
Yeah. I know Brad.
Bradley James, not the actor.
Good dude.
He sold like a property that's like twice the value of my house to somebody for their kid to live in when they went to UVA.
Really?
Yeah.
It was ridiculous.
Are you seeing that? What are you seeing there?
I see that frequently. The other biggest trend, and I know we discussed it on the last show on just the retirement cities in and around Virginia, but over the last 10 years or so, it used to be the trend that after you graduated school and everything, that you would go and you would move to be closer to mom and dad or the hometown that you grew up in. It is much more of a trend now, I think, for the grandparents to move where the grandkids are.
Yeah, that's what my cash clients are doing right now.
Yep.
I wish that would be with our family. We need all the help we can get. Are your in-laws or your parents close to your family?
My mother is over in Augusta County.
Oh, you're so fortunate.
I'm
you grew
close.
up there.
I grew up over there. So
fortunate.
I'm one that, and it was my wife's call that we were going to live over in this area, which I was perfectly fine with.
Yeah. But that's close though.
But I certainly know that her mom and dad have been looking at some property in and around the area just to be close to us over in Augusta County or Charlottesville, Albemarle.
If they make the move from Augusta to Albemarle or Charlottesville, is that going to 2x their overhead?
Well, so Logan's parents live they're from mainline Philadelphia, so they're outside of Philadelphia,
Okay.
so it's the northeast move where if they
right.
moved from up there down here, that it's the market change for them. So, and that's something that we do see fairly frequently, Northern Virginia especially, but it's not uncommon for New York, Philadelphia, Boston, or even some of the other locations like Colorado, or California, Texas, to sell property, and that they move to this area. I was just talking earlier to Alex Howell, who his brother Jimmy was on the football team, and he's a financial advisor here in town. And he said when Jimmy settled here, when he settled here, his parents moved up from Florence, South Carolina. So that's a trend that we see commonly is parents relocating, and as it's with their kids finding jobs. And Charlottesville is a growing town. There's always work going on at the hospital around here. It's been in talks that NJIC is looking to expand their facilities, so we're going to continue to have an influx of jobs and people working. And I think we're going to see not only the people filling those jobs, but also their family coming to follow them as well.
Questions are coming in, guys, and you, the viewer and listener, can ask the panel questions. Kelsey Klein in Albemarle County. For Taylor, how many of your clients in 2023 have been cash buyers? What percentage?
50?
Get out.
Probably, yeah.
That's higher than I would have thought.
For real, dude.
Yeah.
Half of your buying clients are all cash?
The ones that actually bought something.
Dang, dude.
Yeah.
That says something right there. Vanessa Parkhill in Earlysville watching the program. How about this post from Joshua Tracy an hour ago? Josh Tracy, I love you, homie. He sold his clients bought a property in Whittington. And I'm highlighting this for this main line that he writes in his post from 1 hour ago. Still a competitive market, even in the upper price ranges.
Oh, yeah.
Show us yours on that.
I showed Karen Ball's listing in downtown this weekend.
That's a great listing.
It's great. They've got, my clients were considering it. I don't think we didn't make an offer ultimately, but they had multiple offers on that house. It was $1.65 million.
Is that the one off Rugby?
No, it's off of Wine.
Oh, okay. Gotcha. So that's North Downtown.
North
Right
Downtown.
across from the ball field.
Yeah.
That's a great location.
Awesome.
Yeah.
Beautiful home, $1.6 million, multiple offers. And speaking about cash in all areas, I don't know what those offers consisted of, but when I was talking to my clients about what they should consider when making an offer, I said, do not discount the fact that there's been no listings in the last 6 months in North Downtown that were over $800,000, which isn't indicative of the value going down. It's more indicative of the
People holding their houses.
Holding their houses, but the quality of homes that were listed. $800,000 in North Downtown is a home that needs some work.
No doubt.
Or it's very small.
$800K in North Downtown is the entry point.
It's the entry point.
Yeah.
So if you are a luxury buyer who's been waiting for North Downtown, you've been waiting 6 months to get something that's move-in ready.
Yep.
And so people, and that type of buyer is somebody who has cash, maybe coming from outside of market, maybe who's lived in Charlottesville forever, maybe who has a company. It would not surprise me if they got cash on $1.6 million in North Downtown. There's not been anything else to spend their money on if they're wanting a move-in ready, large square footage, nice home in that small part of town.
What's your take on that?
Yeah,
I think he's right.
No, it is, and it's, when we see the lack of inventory, it's really across all the price points for us.
Mm-hmm.
We've got some good friends that, they live in New York City, and they had bought they're very fortunate that they could buy into a co-op that was up there, but it's a 1-bedroom, 1-bath co-op. And right now in New York City, those are a dime a dozen. I mean, it might be a $750,000, home up there, but there's more of that inventory available. So when you look in New York, where their market is more tight is when you get into that 2.5 million and up price point. Mm-hmm. And that's where there's a competitive market in there. But the lower price points, there's a lot of availability. Where we are located, I don't care if it is a $250,000 home or if it's a $1.5 million listing. If that is what you are looking for, there's only so many $1.5 million listings that we have here in the area, and they don't come on the market all the time. So when they do, and people are ready for them, they have to make an offer. So we're seeing it across all the price points.
Great take right there from Jeremy. Karen Ball's on fire right now. 1075 Old Garth Road under contract, 1895 lists. 221 Wine Street under contract, 165 lists. 1440 Grove Road under contract, 1095 lists.
Yeah.
Avon Street in Belmont under contract, 509 lists. Nottingham Road under contract, 475 lists. She legitimately has 5 homes under contract right here. Back of the napkin, rough estimate, I'm thinking somewhere in the neighborhood of $5 million of business under contract right now.
And the nicest person.
Yeah.
She's a nice person? I don't know, Karen.
She's a lovely person.
Super
Yeah.
nice.
Okay.
Yeah.
This question from Jonathan comes in from the panel. How could someone get into one of these coveted neighborhoods if the homes are going under contract in all cash and multiple offer scenarios in a weekend? We would love to live in North Downtown. We would love to live into any of these neighborhoods, but how could someone get into these homes? That's a great question.
Yeah.
Have a bag of money. Win the lottery. Is that what you're going to say, Jerry? Rob a bank.
It is.
It's not easy.
It is not.
For everyone.
It is not easy.
Yeah.
There's a couple of the biggest thing that there is patience. I don't care if it's
a real next play mentality.
I mean,
it's a sports reference.
As we've discussed on here, there's going to be at some point there's going to be a change in the general market. I think Charlottesville is more insulated than a lot of markets. But whether it's time and savings and work that it takes, or just waiting for the availability, but but being patient, and if it's something that you're working towards and you set a goal, then be prepared to make the move when the timing's right. You never know what's going to happen or what's going to come on. So. But there's no great answer for that.
There's no great answer for this. I asked this question to Quentin Beckham and Carrie Griggs. I'll ask you guys the same one. If you want to get into North Downtown, those sexy houses in Belmont, say Ednam Forest, Farmington, any of these hot neighborhoods, and you currently own a house, do you have to list your house, go under contract before you can pursue one of these houses?
Right.
Can you even go in with a home sale contingency in 2023?
No.
Absolutely not, right?
Absolutely not.
Okay.
No.
Okay. So you have to list. Do you have to sell? Can you go in under contract?
You have to get really uncomfortable.
Okay, explain.
You have to get the cash in your hand and risk being homeless.
Oh, you hear this, people?
Yeah.
Or you have to be able to financially swing carrying
Two houses
for an extended period of time.
If you can qualify.
What about a bridge loan?
The bridge loan crossed my mind, but
does a bridge loan scare you?
That is if Scott Morris was sitting right here,
he could answer that. Yeah.
But there's. I feel that people talk about bridge loans with more simplicity than what actually goes into that. Like you need to do your due diligence and your work leading up to that.
Explain.
Because there's a verification of a lot of different things that has to come into play for the bridge loan to come into effect. So if you want to make offers using a bridge loan, you really need to start that process and conversation with the lender probably 3 to 6 months in advance of really making a purchase and have everything lined up and ready to go. I am not a lender, but having worked with new home construction and everything that I've seen, it is not oh shoot, I need a bridge loan for this home and I got to call up the person that's doing my mortgage and hopefully they can do it in 21 or 30 days. There's a lot more to the process of getting a bridge loan than that. So again, a lot of these things, sitting down with a very good mortgage lender and discussing those options, and finding who has a competitive market for a bridge loan right now is the only true way that I can see that But either you have the financial ability to swing carrying a property. Now, again, listing it once you are under contract, I don't fear for a lot of homes in our market that they're not going to sell in a fairly timely fashion.
Yeah.
But it's a game of chicken, selling your home and then finding a home and being able to be competitive. And what do you do in the short
Being explicit about your needs to the buyers is pretty important there too. So there's a section in the MLS that is not public, and often in that section,
the 60-day seller possession.
Yeah, often that section,
we need it.
It's spelled out pretty clearly that we need a 60-day seller possession. As someone selling their home, recognize that a buyer cannot legally, if they're financing the home, they can't let you live there longer than 60 days.
Yeah, we actually learned that on Real Talk.
Yeah.
Because we were talking about this literally, I'm not going to blow up his spot here, but he was talking about how he was seeing seller possessions go 90, 120, 150 days, and then multiple lenders watching the show, including some from out of state, were saying that's mortgage fraud.
It's mortgage fraud.
That's legitimately mortgage fraud.
I've heard of people handling it outside of the contract. So on the contract.
Well, that would be a rent back.
But that's
also mortgage fraud, because that would be your primary residence then.
That's mortgage fraud. Yeah. So, you'll see in the contract, it'll show, in the contract, I've heard of, in the contract, it'll say, we'll do a 60-day lease back, and then on a piece of notebook paper, it'll say, and another 30 days when that's over. So.
That's interesting. I didn't even think about the insurance fraud.
The insurance is insuring it as a primary residency as well. So normally they ask if it's 30 days or 60 days, depending on the insurance company, that they're going to be occupying the home.
Is the insurance different for the first 30 or 60 days because it's technically a tenant in there?
No, the insurance will still be in there. They just want to make sure that the owner is going to be occupying it within that time period. Most companies are. It's the same thing with auto insurance. If someone's moving out of state, they're like, well, I've got out-of-state tags and out-of-state driver's license. They get it. There's a certain time period that they normally allot for you to get everything switched over. Most people do it in a reasonable time. Some people forget to, switch their driver's license in the first 30 days, 60 days that they're moved to a state. There's a lot going on. So there is a little bit of an assumptive time period that, you don't close and you necessarily have the moving truck right up there.
If you are deciding that you want to sell your house and pivot into another house, it's really important to understand your pricing strategy too. You're going to
Oh, you're kind of talking. You're talking to the guy here.
Yeah.
My wife and I literally having this conversation over the dinner table. So explain this to me here. We live in Glenmore.
Yeah.
We bought it March of 2020. There's obscene equity because in March of 2020 we
Yeah.
thought the world was coming to an end.
Right.
We were touring open houses in March of 2020, legitimately wearing raincoats, plastic bags over our feet,
Yeah.
mask and
And a
latex
hazmat
gloves.
suit, yeah.
And I had to take my clothes off in the garage.
Yeah.
Literally, that's what was happening. But my wife and I said, if everyone else is
PTSD.
scared, let's do the Warren Buffett mentality
Yeah.
and get greedy when everyone's scared. So we
Yeah.
got a great deal.
Yeah.
And now it's 60% up in value.
Yeah.
But here's the problem. So is everything else.
Yeah.
And here's the problem. The rate's 6.9 and I got a 2.75.
Yeah, right.
Walk me through what we're going to do.
Well, I mean, when you go to price a
move.
house, there's always a
Yeah.
range. It may be a pretty like narrowed in range, but it's a range based on, okay, I could list this house somewhere between 390 and 405. If you need to sell and you need multiple offers, you need to err on the conservative side of the range of your pricing. If you put it most aspirationally and you start to accumulate days on market, all of your power as a seller goes away.
That's great advice.
If you want the terms most in your favor, list for 390. You're more likely to get 405, a waived inspection, and a 60-day rent back than if you list it 405 and you get 397, an inspection and no rent back.
It can be doing a comparative market analysis right now it's been difficult for the last 3 years.
It's challenging.
Why? Because the
very
comps, 30-day comp is dated?
30-day comp is that's been a problem with
30-day comp is
appraisals
dated.
from
Just-
time to time.
Just the market is changing so quickly. It is hard to gauge.
Yeah.
And I've seen realtors that have been in situations where they're like, if we list it on the lower end, we're going to get a multiple offer situation.
Is that dirty?
But they list it. No.
A lot of people have issue with that strategy.
But this is almost for the realtor. But it almost is too low, and then they end up with 45 offers or something like that, and it's a lot. It's stressing the buyers out. It's very difficult to hit kind of that sweet spot between not being overpriced, not being underpriced with
it
where
is.
you're listing it,
It is.
because you can get multiple offers, but you can almost get too much.
Well, you could turn buyers off from making offers if people get
Right.
PTSD from what's going on.
Yeah.
You lose 5 times in a 6-offer situation. You walk into a house, you hear they have one other offer, you just turn and walk back out.
Yep.
I mean, keeping people in the game or keeping people dispassionate is part of my job. And
How do you do that?
The moment you meet with them for the first time, you say, listen, I need you to try to get attached enough to a house to visualize whether or not you actually want it, but recognize that your purchasing power is such that this is going to be a process where we're going to lose a few times, and one day we're going to win, and you're going to love the house. And a lot of my clients
This guy's good at his job.
a lot of my clients have won on houses that they would rather have. It just got very lucky. Like, oh, I'm so glad I lost on those other 10 because this is the best house we offered on. But it's a process. There's a lot of times where I have phone calls with people who are crying on the other end of the phone, and it's just hearing them out and saying, I understand this is extremely frustrating for you. I promise you it will happen. I've done this 1,000 times. You have not, so this is all extremely raw and new to you. I've seen the trends of your transaction and 100 other transactions I've done before. I promise you it will work out with you in the end. Just stick with me here. Just hang tight.
That's
Yeah.
great advice.
Yeah. And
I love the empathy.
And really good agents as well. Before you ever look at homes, it's sitting down and spending time with the client and learning about their situation, where they're coming from, what their like must-haves are, what their wants are. Like there should be a lot of learning that goes on, because you could spend your wheels a lot, going and looking at different properties.
We had
looking
last
at
week we talked about is it a good time to get in the market, and maybe some tips for new agents. A tip for a new agent is be brutally honest about everything the first time you meet with somebody, because it's really easy if you don't have a paycheck to say, let me waste my time in the 1% chance this thing turns out. You need to tell somebody the truth about what they can do in the marketplace, and also not waste your time. The opportunity cost of your time is extremely high, and if you're driving an hour away for a client who actually doesn't have the purchasing power to buy anything, either to be a nice guy or in the hope something happens, you're wasting both of your time.
And that's it's doing them the disservice if you're not. So.
And people appreciate the honesty.
Guys, comments coming fast and furious. This is from Todd Rath. He owns Blue Toad Hard Cider in Nelson County. He's also a real estate investor with multiple properties at Smith Mountain Lake.
Okay.
He says, have Jeremy or Taylor found any offers where the buyers say all the cash on the offer and come to find out it's truly not? I personally dealt with this on a deal that was delayed, so I penalized the buyer. Basically used all cash to get the contract. What would they do? We hear about that.
Yeah.
Don't you hear about the all cash, but then they go into a financing vehicle at closing?
There are certain banks who essentially can make their program look like all cash and then finance it quietly in the back end. I had clients who we made an all cash offer, and I was not aware that they were going to get financing.
Is that sketch?
I just told them, hey,
Is that bait and switch? Misrepresenting?
if there's no appraisals, maybe, I mean, it's misrepresenting for sure. I told them, at least I would have appreciated knowing.
They're on their side.
But if you have enough cash down and you get an appraisal waived, it can be sort of 6 in one and half dozen the other, but it's probably best to be upfront with the seller. I mean, but I'm hearing about people, making offers that they can't actually do in the hope that the seller will be too scared to relist the house and call them in breach and just capitulate 15 days from now.
What?
Yeah.
That's a hell of a bluff.
Yeah.
You want to touch on any of this, Jeremy?
Yeah, I haven't. So a few of the situations that I've seen, most of the time if someone says they're coming in with cash, I've seen those have gone through as cash offers. A good seller's agent is going to want to see some proof of all that. A good, they're going to want some verification. If someone's,
What's that, a bank
if someone's got a
statement?
cash,
Bank statement or
Portfolio
or a
stocks and
portfolio
equities?
account.
Yes.
Okay.
And I truly believe that most people are trying to do good. They want to do right. So I have seen in some instances where someone has said, I'm going to be pursuing a small loan for this property. Maybe they want to do some repair work or
But
something.
I have the
But I
cash.
have the cash to do it.
Now,
That's
there's verbiage you can
genuine.
put in the contract that says, I intend to finance this, but it's a cash purchase. If something goes wrong, I will make you whole with cash.
I will make it whole with cash.
Yeah.
And that is probably, that's the way that should be done.
Yeah.
Because you're telling the seller as a buyer, rest assured, I can pay, here's how I can pay for this. But I also want to do a few things, and it's the most honest way and the full disclosure saying, I'm going to be pursuing this loan, everything should be good, here's my assets to show that I can pay for this in cash. And that way you don't have to be tricky. Just be honest with the situation. And that's a perfectly reasonable offer, and if anything, it shows, more financial viability because they're going to get approved for a loan and you got the cash to cover it.
Right.
Spencer says, so there's degrees of all cash buyers?
Sort of. I mean, yes and no.
Yes.
Yes.
Neil Williamson, hello, Free Enterprise Forum presidents watching the show. So is the Daily Progress. Degrees of all cash buyers. Show is yours on that topic.
You mean, describe, what does that mean?
I mean, there's the guy that's clearly super, super wealthy, that legitimately has no problem, guy or gal, can buy it all cash, doesn't even have to mention the financing in the contract. Then there's the person that is considering the financing in the contract because they see the opportunity cost of spending $500,000 on a house, $1 million on a house, instead of putting it in the markets where they could get 6-8%, whatever the return is.
Yeah. Now, a couple of years ago when the rates were 2.5, this was probably more common. Now that it's 7, it may not be the same calculus.
Because you would be more inclined to go all cash because you got a 7.
Yeah, I had clients who
At 2.75, why would you buy $1 million cash?
were buying
house?
things in cash, but the money was so cheap. They thought, I'm just going to keep my liquidity, not sink this in the house. I have the cash offer, but I'm just going to finance it at 2.5, and it's a long play on market appreciation and tenants paying this low cost of cash for me, and they've done extremely well doing that.
I like that approach.
I mean, when it comes to the degrees of cash offers, I mean, you've got everything from someone sold a business or they just have the ability. They just sold a house and they're moving down and they're probably buying a home with cash and they could buy a second one if they wanted it. Like they just have that extra
They're putting
reserve.
a house into a house.
Right.
They're not showing their savings account.
Exactly.
Yeah.
And then there's some people that are doing like 1031 exchanges. They sold an investment property and they're trying to avoid capital gains, so they're using that exact amount of cash that they had to roll
I've done
into
that.
another property.
Yeah.
And then there's some, and these I think are fewer and far between, that they are emptying all known sources of, whether it's stocks or sometimes retirement savings accounts.
That's more likely
people-
on financed offers, to be honest. People with the low down, like the entry level buyer with 3% down, are more likely to completely deplete
Yeah,
their
and
savings.
those are very rare, but it is a market now that I've seen people reaching for some things that they've never had to do before.
They're desperate.
Yeah,
So,
for sure.
And the problem with the 401k route is you got some serious capital gains exposure if you do that.
and in some instances that I've come across, it used to be that you would have co-signers on mortgages for your credit, but I'm seeing some that it is co-signers for a higher down payment.
For qualification.
For qualifications, and it is properties in and around Charlottesville, and it's like we needed more cash, and in order to do that, we had to have someone else help us.
So that's mom and dad getting on?
Well,
Yeah,
mom
because-
and dad don't have to co-sign in order to gift funds.
But there's a certain amount that they can gift. They can only
Yeah,
gift up to a
right,
certain amount.
right.
And the funds have to be seasoned before
Yeah,
the LO.
right. That's right.
Right? And what's the seasoning of the funds? I guess it depends on the LO.
I don't exactly know, but a time frontier, but it has to be traceable funds. You can't just pull cash out of the drawer.
Right.
I think the giftable amount is either 20 or
I think it's
25,000.
20.
I think it's
I
20,000.
think it's 20K. I think
So,
it's
and
20.
that one I don't think has to be, but there have been instances on some of these, 1.4, 1.5 million dollar homes that are in town, and it's a couple that's in town. They got some grandkids, and it's also a parent that's on there as well, and they're putting down 450, 500,000 in order to win a house.
Right.
This has come in for Taylor specifically in the setting that you talk about where you have to sell your house to buy another one and you risk being homeless. Have you actually seen someone not win the deal and then get stuck without a place to live? Thank you for that question, Grayson. That would scare the hell out of my wife, man.
haven't.
That wouldn't scare me. That would scare my wife.
It's been really close. I am pretty relaxed
Me too.
during all transactions, and I'm not a panicker. But last year there was one time where I started to feel not visibly to my client. It was very calm to my client, but when I went home, I was thinking, okay, we're getting close now.
It was a family with kids?
Yeah,
Dang.
Yeah.
Young kids?
yeah,
Wow.
really young.
So
And-
what were we talking about? They sold their house, they wanted to buy another one?
Yeah, they sold their house and they were moving to a more established neighborhood. And in the process of selling their house, prices jumped and supply got extremely constrained. And then they voluntarily constrained their budget because the payment went up. And I started to feel the squeeze on. I'm not actually sure that
This exists, the house they need?
that exists. We got extremely lucky, and I think this is an instance of the 1% of times when you have a benevolent seller, because they wrote a buyer's love letter to that seller, and there's no way that we were the highest offer. It's just not conceivable. I just can't. It's not possible. I don't know that, but I've done this enough. I think we came in at the asking price in April of last year in
Wow.
Lake Monticello and won. There's no way that we were the highest offer. That was a
Was that your most
That's
stressful transaction?
no.
Really?
No.
Because I'm stressed right here.
No, that wasn't the most stressful. The most stressful are the ones where the seller calls you and cusses you out or something like that, which is actually situationally kind of funny from time to time. But it was one where I was probably one of my most emotionally invested situations, because they are just a grade A family and just the greatest people, and you want something to work out for these folks, and I was very pleased that it did. Yeah,
That's great.
And I think it is human nature to go through all of the horrible what if situations, and
Yeah.
there's
My wife does that every day.
the general fear of the unknown, and
Sorry, sweetheart.
I often said when you're buying a home, you're not buying a toaster. This isn't like a $25 purchase or something like that. It's a big move, and so there's a lot of concerns and things that go through buyers' minds. But I've yet to come across a situation where someone was truly homeless. Even in the home building world, we've helped people bridge a short period of time where something didn't go quite right. I've always used the expression, everything good or bad in my life has led me to exactly where I'm sitting right now with you all here on the radio. And life's not always smooth, life's not always easy. But here I am, which is a great thing.
Yeah.
And for the buyers, you have a great agent. You trust the process, and there's an element of faith that goes into it. But if you have to move or you need to move, like you can't be scared.
And you can extend your time in the house by extending your under contract period, so you could be under contract for 60 days and then rent it back for an additional 60 days and essentially get 120 days in your house. But that under contract period is a lot of uncertainty, and a lot of things can go wrong. So
the macro headline this morning, gentlemen, was mortgage demand at a low that we have not seen since February. That was the macro headline. Grayson's asking the question, he's a finance guy, is this a short-term hit for local car in the Central Virginia real estate market, or does he expect Taylor and Jeremy for it to be a longer hit? Refinancing of houses is at very, very low, obviously, as well.
Yeah. He might be more qualified to answer that question than I am.
Mortgage demand drops to the lowest level in 3 months is the macro headline.
I'm not sure it's gonna. That's nationally, right?
Nationally, 6.91 last week from 6.69 on a 30 fix, with conforming loan balances at 726 or higher or less. Excuse me.
So I did not bring my crystal ball with me today.
Yeah.
But
I got one over there.
I did.
Literally.
Like I have never seen anything sit still for very long within the housing market. Like normally when there's like a reaction in one direction, there's something that will ping pong it back. I mean, it's much more like a game of ping pong than anything. If it's at this might not be the low, maybe there's a lower point to it. But normally when there is a low, there's normally a jump back up. So I know Scott has stuck his neck out there a few times.
He said at the end of the year below 5.
Sub 5. So I really don't know. The biggest thing that I would really like to see as far as rates is more just some stability and continuity than anything, because each time that it goes down and then it goes up and everything, it's the exact opposite of what I just said. I'm saying it plays ping pong with itself. But really, I think every time it jumps in one direction or another, it just makes people freeze. Whether it's going down, if it's going down, is it going to go down lower? Or if it's going up, do I need to wait it out a little bit lower? I wanted to say on the last show too, is that, if people are, afraid to make a move. If you talk to people that bought homes in 2020, they were like, oh my gosh, interest rates are going up. I'm paying 3.5%, 4%. Like, prices are like way higher than they were in 2018. The same buyers in March of 2020 are also like, man, I'm glad I did it then. So, and who's to say, buying a home today, people aren't going to look back in a year or two's time and be like, glad I bought it then. So it's just.
I think that's possible.
I think that totally is possible.
Yeah, I think it's possible. One thing I will say is that our marketplace is less sensitive to extreme variable trends than probably the national
100%
marketplace.
UVA $6 billion yearly economic impact on Central Virginia, 300,000 person market. Military, spy, defense, a $1.2 billion yearly economic impact on this 300,000 person market. Those two industries alone carrying the weight. And then we got the finance, we got the technology, we got you guys with real estate. That's carrying economy here locally. I mean, it's a great market.
As these things seed in and become long-standing trends, will become more. They'll infiltrate here, but a one-day thing is not gonna, or a one-weekend thing is not gonna affect us.
Do you want to get to the other take on upzoning?
Yeah, let's do it.
Yeah. So the take on upzoning, it's percolating now in the city. They're trying to create more density. The economics 101 is if you create more inventory, maybe prices will diminish. I'm not buying it. I think if you take land and make it more opportunistic, where you could put more units, rooftops, and beds on that land has more value. If that land has more value, it's going to be more expensive. If it's more expensive, whoever buys it is going to want to return because it's more expensive and they're buying it. I don't think upzoning does affordability, but you guys are the experts. Anywhere you want to go on upzoning?
I'll let you take.
I don't think it does
this.
affordability. I think somewhere, depending on where it is in town, it could cause some heartburn among existing homeowners. I mean, in my neighborhood, I don't want it to become a. And they've already done their best.
Sixplex next to you? You don't want a sixplex next to you?
Yeah. I don't want frat parties at my neighbor's house every day. I mean, can we talk about the infrastructure in town too? I mean,
please.
do I want 4 people living where one person used to live, and now I really can't get down 250 towards Pantops at 5 p.m.? I mean, the road's already backed up an hour. Take some of my tax dollars and reinvest it in the infrastructure around town before we upzone, please.
Amen, brother. Unique take from you, especially since you're in the real estate business. A lot of the folks in your game want rooftops and beds and doors at any cost or any expense. I love your take because it was genuine.
Yeah.
Your concern of quality of life.
Yeah, 100%.
That's the first agent I've ever heard say that about upzoning and new inventory. 100%. Anywhere you want to go on this. I respect that, though.
Yeah, I mean, it's.
Can I interject right before you
Yeah, go for it.
All right. Prices are going to go up regardless. It's like quality of life also is conducive to higher prices. My income is positive either way. You know, I definitely want more inventory to sell, but if I sell 2 houses at $100,000 or one house at $200,000, I make the same amount of money.
And do less work.
And I do less
And
work.
the second scenario.
Exactly right.
Yeah,
So,
it's good
anyway,
call.
Go ahead.
Yeah, no, I mean, I enjoy getting in little mental debates with myself. I can't pick like one side per se on this, because I always try to think through what's the counterpoint on the other side. So on one side, it does increase the inventory, and that's one of the things that we could certainly need is more opportunities. Our job market, as you just pointed out, is going to continue to grow. People are going to continue to move here, and the options are going to be we're either able to build closer into the city, or people have to move further away. At the same time, we've seen locations like Crozet has exploded over the last 25, 30 years. Mm-hmm. They are working to and implementing more structural changes to help manage the population that's there. It was almost that the population was there first, and then they kind of have focused on making accessibility easier for getting around. If there's a wreck on 250, it affects a ton of people coming into work.
Oh yeah.
It's not one or the other. I mean, if there's going to be zoning, there's got to be other things that are going to have to be factored into that in order to accommodate for that growth in the population. At the same time, Taylor, to your point, you said, whether you sell 2 $100,000 homes or a $200,000 home, the more likely scenario is if that was a $200,000 home and they built 2, they're probably going to be 2 $150,000
That's
homes,
also true.
or 2 $200,000 homes.
Right.
So I don't see the prices, referenced them before, but Dave Ramsey said if you're waiting for the price of homes to go down, it's not going to happen. They might not go up as steep. We might not see them being 20%
well, that's
over.
because we have that
5%.
demand segment still.
The demand segment is there, but over the next 5 years, prices are not going to be coming down. They're still going to be going up.
And the luxury goods will
fast.
if you take non-luxury goods and then just upzone them, the luxury goods become exponentially more expensive as well.
Yeah.
And
it seems like common sense.
I'm sure I'm oversimplifying.
I don't think you are.
It's not a blanket policy where every neighborhood in town is going to be upzoned, but it's situational. And I guarantee there's a lot of people who are not on my lawning it that are probably also supporting it at the same time.
Not in my backyard.
Yeah, the NIMBYs.
Yep.
Yeah. Neil Williamson says, now he's the president of the Free Enterprise Forum, a lobbyist, a guy who drives policy. He says more housing everywhere for everyone. He's a huge proponent of upzoning. Neil, I love when you watch the program. We love the Free Enterprise Forum, my friend, and donate and help the Free Enterprise Forum. I think you guys are completely on point. I'm really curious to see when upzoning becomes a reality, how value or momentum is going to go behind the HOA neighborhoods, because those covenants and restrictions supersede the policy and the laws from city council. So there's like 12 or 14 HOA or POA neighborhoods in the city of Charlottesville. Those will be protected from the upzoning. I'm willing to bet that those neighborhoods are going to uptick in value even more than normal, because the folks sprinting to those neighborhoods are not going to want a sixplex next to them, 6 cars parked in front of their house, and all the stuff that comes with it. Jeremy's got something to say.
Yeah,
you disagree?
No, not at all. I mean, we're definitely. anything that's going to be protected in that way, because again, human nature. I don't think anyone, once someone's settled in their location, especially if you're building new construction, if you're building a home, the people that lived around you are sad to see whatever lot you're building on change. It's just a change. And so most people do not want to see that change taking place around them. I don't care if it's, you're building, townhomes, or if it's going to be condos or something like that. There's always going to be someone that's going to be upset when you have a change like this.
That's right.
It's just going to happen. I certainly agree with you that those neighborhoods that are going to be protected in that regard are going to see an increase in their value. Especially depending on where you are and how long it's been established in Charlottesville, we are seeing there's very few half-acre home sites that are being built.
Oh, the land
it went from half-acre to quarter-acre, it went from quarter-acre to fifth-of-an-acre home sites, and now if you can get a 12 by 14 patio on the rear of your home, congratulations, that's a lot of land.
Yeah, right.
So that has already been changing, and it's going to continue to change with the upzoning and the amount of space. So anytime you're going to have a location, I don't care how old the home is, with just a little bit more elbow room, it's going to have that value.
Great take. This from Waynesboro, Kevin Yancey. My brother-in-law closed on his first home March 3rd, 2023. Multiple offer scenario. Everyone wanted a home inspection. He waived it to win the deal. He won the deal. Before he made the second payment of his mortgage, the sewer collapsed. $17,000 to repair and replace.
Well, that might not be found in a home inspection anyway, right?
I don't think the sewer would be found in the home inspection.
No.
Not necessarily.
That's the line that connects the house to the under the ground.
The sewer main.
Yeah. How does a home
I've never
inspector?
seen a home inspector snake a sewer main.
By the way, make sure you have service line coverage endorsed on your homeowner's policy. That does have to be added on in order for that to be covered.
Really?
It's not an included.
I've had to
feature on
replace
homeowners.
that. That's a very expensive replacement.
It is.
That happened to my house in Redfield.
Taylor did it.
I dug up my water main.
Yeah.
You did it yourself?
Well, no, I have a galvanized steel water main, and I went in my basement, and it sounded like I had a whooshing sound, so I was worried I had a gas leak, which I don't think actually makes a whooshing sound, but that was my ignorance at the time. My father gets a random phone call from me about once a week, probably shaking his head thinking he failed as a parent. But
I don't think he thinks he failed.
I went outside, and I realized it was coming into the water line in the house. So I went outside, and I looked directly in front of my house, and I had some wet dirt, and I thought, well, I can fix this. So I dug about a 4-foot hole and found it and found the leak. But the type of pipe that I have is not used or in that size anymore, so I couldn't patch it.
Because that time, your home was built in what year?
I think 1965 or 7.
Yeah.
But
So
the plumber that
6
came
years
out
old.
to ultimately fix it told me that in 35 years I was the first person to dig up their own water leak in the front yard. So
I would expect nothing else from you.
yeah.
So to get back to Mr. Yancey's question or
Yes.
statement there, so I wouldn't say the home inspection would have caught that.
Yeah.
But normally when there's a home, it would be very odd for it to just be, we happen to find the one thing that was wrong. So normally if something happened that quickly after it, that I wouldn't have been surprised there would have been a few other items that would have come up
Yeah,
on a
that's
home
true.
inspection as a result. That per se, it might not necessarily be there, but they do exterior looks over the home. It's not just the interior. So
Right.
that is not an uncommon thing. Like I said, the service line coverage is something that does have to be endorsed in a home policy. It covers buried utility lines from the home to the street. So anything that's underground. Those are public utilities in a lot of cases. So, public water and sewer, but it is the homeowner's responsibility when it's on their property.
Yeah,
so if that does
that's
get
right.
damaged, and that has happened.
And if you have an old house, you likely have a galvanized steel pipe, which means that it's about to die.
Yep. It is in most properties. I make sure that I have that on there. Really, anything over 15 to 20 years, I automatically add that on there because there are actually companies out there that send letters and they say, "Are your service line coverage covered for $20 a month?" We'll insure that. And I have clients that will send me the letters and say, "Do I need this?" And I said, "No, I already have it on your policy, and you're paying $3 a month for it, not 22."
$3 a month to protect that
not
line?
a lot. This
is
probably,
great
it's
advice
probably
right
$30
there.
or $35 a year to add on that service line
I've
coverage.
had to replace that. It cost me, I forget the bill, but it was thousands of
Yeah,
dollars
you
at my
probably
Redfield's
a couple
house.
grand.
Most service
Yeah.
line policies covered up to either $10,000 or $20,000. $10,000 is about right. I mean, probably you're somewhere around $8,500, $9,000.
That's great
Yeah,
advice.
that's great. That's
great
great.
advice. He says even worse, it was Orangeburg pipe.
Oh, was it a terracotta?
Was it? Yeah, I don't know what Orangeburg pipe is, Kevin. I think you got three guys over here that have no idea what that is.
Orangeburg pipe is at
Tell
all.
us more about that, Kevin. We got two realtors asking questions. First, let's go to Roger Voisinay of Remax.
Yeah.
He says this: one positive outcome of this that I know of is a 200-foot by 50 lot I have on East Market Street and a dead end 16th Street. Shit, where did that question go? I'm dropping profanities here on my talk show. Hold on one second. Roger, your thing just disappeared. I got to get that comment because it was a good one. I'm now going to the okay, here it is. So Roger, he is Mr. Woolen Mills, lives down Market Street. Remax, great guys, come on this network. I'll repeat it again. One positive outcome of this that I know of is a 200-foot by 50 lot I have on East Market Street and a dead-end 16th Street. This is a corner lot with road frontage on both sides. Currently, I am restricted to just the one rental home on the 50-foot East Market side. The remaining land is flat with the road frontage on the dead-end street. In the future, I should be able to build 3 to 4 cottages a la Ross Chapin or Sarah Suzanska's not-so-big house book. The result will be 4 or more nice, small, detached homes with little backyards and off-street parking, city wins, and 3 or more new homeowners in a location within walking distance to downtown. That's awesome, Roger.
That's great, yeah.
And I think with some of this upzoning, it's not either or. I mean, there's a lot. That's a great example of the and. There's going to be some instances where it could be more congested, but I think that's a perfect example of opportunity.
That sounds lovely, and there's going to be instances of people coming in and throwing up extremely low quality buildings and charging people too much, and without a great agent to know the quality of things, people are going to buy assets that are going to be more headaches than the substitutable good right down the road.
What do you think about that, Jeremy?
I agree. That is a possibility, but there's also a lot of quality construction companies that are in the area, so they could
no
do
doubt,
that.
no doubt.
So, and I wouldn't. I think we have more quality around here than we do that, but right now, I mean, it's difficult to build at a good price point. But I'm hoping that the market also can carry that quality. I was thinking about. Wasn't there, it was a headline that I saw, so I'm going to need you guys to help me out here, but over on JPA, there's a couple of those like older stone cottages, and I thought I saw a headline where one of those, that land might actually be coming up for development.
Tim Carson has the listings right now. He's got 2 listings on JPA, the Cherry Avenue side of JPA. They're active. He's got it listed in both commercial and residential on the MLS. You, I think, are referencing Tim Grossman's listings on Shamrock.
Yeah.
He came on the show.
Yeah.
Okay.
Grossman had 2 listings that he's held for 20 years. Friend of the program, Tim Grossman, also of Remax.
I know Tim. I've known Tim since he
Tim's a
started
good guy.
over there. Yeah.
Great tennis player. He sold these 2 listings purely with the speculative upzoning driving the factor. It was an out-of-market buyer. I think he got 1.6 or 1.7, and he would even admit this, so I'm not speaking out of turn. Both these properties needed tremendous TLC. The cap rate did not justify 1.7, but the upzoning got this out-of-market buyer to purchase because they see the possibilities of 2-3xing the apartments on Jefferson Park Avenue, which is a hop, skip, and a jump from grounds.
Yep.
So that, I think that's the one you're referencing.
That might be it, and and that's the case. And there's certainly some homes that could either use major updating,
for sure,
or could use something like that where the upselling is a possibility and we can increase it. So I think that's a great example there. But I was just trying to think, and that's why I turned to you guys because I just saw the headline in passing and I was like trying to remember.
I love this show because I love local, like you guys. I love just being in the know locally. And the good thing about this show is you guys are smart and experts at what you do. And then the viewers and listeners are chiming in. So we're like crowdsourcing a lot of knowledge.
Yeah.
For example, Orangeburg Pipe, maybe 11 people are telling us what Orangeburg Pipe is right now.
That's good. Thank you.
It was pipe that was used during World War II when steel was rationed. It's wood pulp and tar formed into a pipe.
Yeah.
Another person describes it like this on a different Facebook page. Terracotta, it's absolutely horrible stuff for a house.
I think I said
this from Kelsey, who says, we had to replace this. It's awful stuff. I'm hearing this from everybody here. So evidently it completely sucks.
Yeah.
Timothy Williams says you're doing amazing right now. He's giving you some props on your Facebook page.
Awesome.
This comment has come in. Roger's watching in Pensacola, Florida. He left that comment. He's literally in Pensacola watching. Dan Pettit of Real Estate 3, he's got a great forehand too. He says, specifically for you, is there foundation coverage for a house?
So it is...
And he's actually going to educate his clients on what you're saying here. So.
That is... That's a bit of a broad brush to ask about. So insurance is in place to protect for an event that happens. So something has to happen in order for insurance to kind of take in. So an example being, earthquake coverage. We had an earthquake in Mineral, Virginia. And there are certain instances where if you had earthquake endorsed on your policy, which is an option for most insurance companies, and in Virginia I have some people as a result of the Mineral event that added onto their coverage, but it is not always an included coverage on your policy. In the event of something like that's happening, if you have that endorsed in your policy, if there was an earthquake and the foundation was affected as a result, that's an insurable event, and that is something that is covered. Now, there are instances where it's general wear and tear, or it's poor construction, or it's something along those lines. Doesn't necessarily mean that it is an insurable event. So insurance isn't there necessarily to fix everything that's going to happen for a home, but it insures against certain perils. So, yes and no, depending on the nature of what is happening to the foundation.
Good feedback. So maybe yes, maybe no yes.
Exactly. I mean, like most things in insurance, questions that I get, it is sometimes yes, sometimes no. It really depends on what the effect is. Another good example for foundations is water is the number one claim. Water claims are the number one claims for homes. And there's different types of water. There is sudden and accidental, which would be like a pipe burst or a roof leak. Then there is backup of water or sub pump overflow and discharge. So in the instance of a sub pump failing, if you have backup of water on the policy and it were to affect the foundation, or if you have seepage and leakage coverage that's on there, if it seeps in through there and it can affect the foundation, that's another example of where the event itself is the water damage and it can affect the foundation.
What about water outside of a cinder foundation causing it to buckle in?
It's going to depend on the type of coverage that you have on the home policy. There are some instances where that can happen. There are other instances that it might not be covered.
It's pretty gradual, so you should be. I guess you would do a
There's again, it has to be an event. If it's like a long-term thing that's permeating, it's not necessarily a claimable thing. Right. It's poor home maintenance.
Yeah, right.
And that's one of the things that some people forget when it comes to home insurance is you own something.
That's a common.
You have to take care of it. A big one that I see too is not all pests or mold is a great example. A lot of insurance policies don't cover against mold damage, but that's also being a good homeowner.
Right.
Running a dehumidifier in your basement or a crawl space, but in the instance where, say, there was a pipe burst and water was created as a result of the pipe, the event is the water bursting.
Right,
and so therefore the mold remediation is part of the water cleanup coverage. So it's normally yes and no. It depends on the situation. And that's an underwriter's job or an appraiser's job.
Jeremy's doing a hell of a job today. It's Taylor as well. We're trying to get to as many of these as possible with about 5 minutes left. A lot of agents watching. Katie Pearl, Keller Williams Alliance, welcome to the show. Ness Realty, your colleagues are all over the show. Long and Foster, all over the show. Real Estate 3, all over the show. And our friends at Howard Hanna, all over this. Mike, is it Moles?
Mike Molson?
Yeah, giving you some serious props right now as well. Evidently, and Dan says, thank you for asking. And yes, that is some knowledge for him, from you.
Dan, you're welcome to reach out to me if you'd like.
Call
I'd be
Jeremy.
glad to answer any more questions.
Anyone that has more information and wants more information on this, reach out to Jeremy. Anything 1950s or earlier is probably going to be that type of piping outside.
Piping.
Evidently.
Yeah.
I've seen it fail.
I had one fail. That exact type of piping. I didn't know it by that name, but I knew it more as that terracotta type piping. Over in Augusta County, same time period for the home. There's a lot of brick ranches that were built in that time period that had that, and that's something. I mean, it can be something as simple as a grader running over the ground and it cracks underneath. Someone driving through the
The
yard.
terracotta sounds like almost in the same category. Is it Quest Plumbing?
Yeah.
That terrifies buyers.
Yeah.
The Quest Plumbing is, guys, it's like the gray tubing with the wrong fittings that often leak. That scares some folks as well.
Yeah, it's all over town. And there's some neighborhoods that if you want to be in them, you're just going to have to accept that it exists.
And then you just take it out and replace
Just
it.
take it out and replace it.
It can be fixed.
5 to 7K, I think, the Quest replacement.
Yeah, and
Depending on the size of the house.
I know people that have been in homes with Quest Plumbing for 30 years and they've never had an issue whatsoever.
Yeah, it's not definitely
It is
going
not. There's different factors that they've looked into, like how long the pipes were exposed to light. You know, the quality of the water can affect whether Quest Plumbing will fail. Some insurance companies won't insure it at all. Some will insure any type of plumbing as long as it's never had an issue. And then if it has had an issue, then they won't do it.
Right.
Some insurance companies don't care at all. So,
Some insurance companies won't insure a house that has Quest Plumbing.
a lot of insurance companies won't.
How do they find out about that?
It can happen in a couple of ways. In the same way we were talking about home inspections earlier, just about every insurance company does some sort of inspection themselves.
On a computer? Or they send somebody to the location?
They send someone to the location. Some agents go out and actually take photos of the homes. Some insurance companies now, they allow the customer to do it. Generally, they're looking for things like they want to see interior photos of the water heater to see how old it is, the HVAC equipment to see the age. The water heater will also generally show what type of plumbing is in the home. The electrical panel, they want to see if it's an updated circuit breaker box or if it's knob and tube or Federal Pacific. They want to see what type is in there. Those are generally the photos they want to see. They don't really care if there's wallpaper on the walls. Some will take pictures of the kitchen just to see the quality. It gives you kind of a quality check because that's normally the best indication for the level of fit and finish within a home is the kitchen. Some will ask for a picture underneath the sink to see what that main water is. Or what type of plumbing is in the home. And the last thing they normally will look at is the main line into the home. A lot of homes, especially older homes, that is galvanized. Insurance companies don't care if that's galvanized, but a lot don't want the interior plumbing of the home to be galvanized plumbing anymore.
Right.
So
Very good stuff. Katie Pearl, are Quest leaks covered under homeowners' policies?
if the insurance company insures Quest Plumbing, then yes. If it is, we were getting back to actual knowledge of a situation. Mm-hmm. So if an insurance company has insured a property and either the homeowner didn't know, or it wasn't known by the agent, or it wasn't known at the inspection if a home had Quest Plumbing or not. If a home has a finished basement, it's very hard to see a lot of the plumbing that's in the home. So in the event that there would have been an issue with that and no one had any actual knowledge that a home had Quest Plumbing in it, an insurance company, if they don't typically insure Quest, normally will cover that claim, but you're probably going to get a letter immediately after that saying we choose to no longer cover your home as a result.
Really?
Mm-hmm.
Dang.
Yeah. Oh, that is across the United States, and not necessarily in our area. There's been a lot of letters that have been sent out over the last, and there will be more throughout 2023 on carriers that are no longer taking risks for certain homes or certain elements within homes.
And why is that? Just because instability markets, everything we're all facing?
It is, I touched on it briefly in the last show, but underwriting losses in 2022, so the amount that insurance companies paid out was extremely high. A lot of insurance companies right now are trying to get out of the red and back into the black in terms of profitability. So they're taking on more, they're focusing on preferred business, and they're taking less risks. So there are a number of insurance companies, and again, Charlottesville, Albemarle, our surrounding area is actually one of the lowest loss ratio locations in the United States. But there's a number of locations in the coastal regions of Virginia. Not necessarily my agency, because I don't write a whole lot of business there, but I've had colleagues that have had business there, and they've had some insurance companies that have sent letters to all of their customers in certain counties that have said, we will be discontinuing our coverage of your home as of this date. Due to underwriting losses, I think it was State Farm, and State Farm is no longer writing homeowners policies in the state of California.
All right, Carly Wagner, I heard this week State Farm is no longer offering fire insurance in California.
There it is. That's huge.
That's huge.
Progressive Insurance in locations in
Because there's fires in California.
Right. These are major companies. Progressive is the number 2 auto insurance provider in the United States, behind State Farm at number 1. In their home division, and you can bundle with Snapshot, but in Texas, if a roof is older than 2 years, in certain locations in Texas, they're not going to write a home policy if the roof is older than 2 years. In the Tidewater area, Virginia, it's older than 4 years. Progressive is one of the carriers that I have. It's one of the 70 carriers that I write with. And so I have to be very careful as I'm looking at different homes in different situations. So these insurance companies are tightening up their appetite, not only for certain things that they're looking at, but certain locations. Again, I have more options here where we're located in Central Virginia than what most locations do. And there are some insurance companies that are small enough that they target specifically, we're only appointing agents this side of Richmond, and we're not touching Northern Virginia. And they'll only write business. They only want to write business in the Shenandoah Valley, the 6481 corridor this side of Richmond, which I find interesting. Some companies are small enough that they can do that.
Todd had a townhome in Virginia Beach that all the units had Quest, lost all insurance unless we replaced all the units. 58 of 60 said yes. Could not move forward without replumbing. We sold and moved out. Lloyd's of London was the only one that would insure these townhomes in Virginia Beach. It was nuts. Wow. That's literally why he moved.
Yep.
Stephanie says, bring Jeremy and Taylor back. Thank you for watching, Stephanie. They're doing a hell of a job. I totally agree. Katie says, State Farm also no longer covers homeowners policies in the state of Florida. My uncle was a State Farm agent there for years, and it wiped out so much of his book of business he had to move to Alabama.
Wow.
In 2022, State Farm lost $18.2 billion.
Yeah, and
$18.2 billion? Is that right?
Yeah, it is. It was. I thought it was 13.8 billion, but it might have been 18. In 2021, I think it was only like 4.3 or 4.8 billion in losses, and then in 2022, it went up to 13.8. And I will say this: State Farm.
About book value though.
That is claims paid out.
Oh wow.
Now I think it was 13.8. Maybe I'm wrong. Maybe it was 18, but billion. And half of those were what's called catastrophic losses, which is the loss either encompassed the entire amount of the coverage. If your home's insured for $350,000,
13.2 billion. You were right.
13.2. Okay.
Yeah.
A catastrophic loss, I think it was close to 50% or like 7 billion of that was catastrophic. So it either affected the entire home where they had to pay out for the entirety of the policy, or it affected multiple homes within an area. So we're talking about tornadoes in Tennessee, or we're talking about wildfires in California or hurricanes in Florida. So half of that, 17 billion, the other half is all the small collective losses that we've had. So repairs on cars, repairs on homes that have just gone up in terms of price. It is a conflict right now. I have a good friend, she's a real estate agent, and they had, I think it was their Tahoe or their Suburban that was totaled. Someone hit them about a year ago, and they were going through the insurance claims process. And the hard thing is that cars are insured at actual cash value. So what the market would dictate that your car is based on its age, that's what you get paid out. If you buy a car and you bought it new for $30,000 and 5 years later it's only worth $10,000, that's what the insurance company is going to give you for your car. Cars have gone up in value over the last 3 years.
Right.
This is a conflict for the insurance companies.
Yeah, right.
Because they want to say, well, that was a Suburban could be an $85,000 vehicle. And if they want to give you $20,000, but if you could have sold that thing the week before that you were in an accident for $65,000,
that's the value.
There's an impasse.
Yeah.
They're charging X in premiums for things that are valued at 2X.
But think about that from the insurance law standpoint.
Yeah, right.
Is if they're used to paying $20,000 for that vehicle and they're having to pay $65,000, that's $40,000 worth of expenses that they're having to pay. And where that gets passed along to is to the consumer.
That's right.
And so it will not be a surprise if you see your homeowner's insurance or your auto insurance that's going to change. And I have some people and their insurance has only gone up $3 or $5. And I'm like, that's pretty good. That's pretty good. I've seen some that have gone up, a lot more than that. Progressive last year, depending on certain locations, some of their auto policies went up 40%. Northern Virginia area, there's some policies that went up 40% with no accidents. And that's the questions that I get. And my job is new policy initiation. I don't underwrite claims. I don't work in that section, but I look at the market values today in terms of setting up policies and making sure the coverage is set up for the future. But, I'll get phone calls and say, hey, I didn't have a claim, I didn't have a ticket or anything. My policy went up. One of the biggest things that you can do is a lot of companies now are letting you customize your insurance by doing, State Farm has one of their like, an app that you can do on your phone that monitors your driving ability. Progressive, it's called their snapshot discount. For Mercury, it's Mercury Go. Safeco, it's their Right Track program. And it allows you to get a better rate on your insurance by monitoring your driving ability. So if you're going to do that, make sure you're a good driver.
Yeah.
Because if not, it can have a different impact on your rates. But that is the one thing that allows you to kind of free yourself a little bit from everyone else's driving record affecting your price.
My wife put the whatever the little thing from State Farm in the car. I did not.
Yeah.
I was worried about me and my driver.
Yeah.
She drives 5 miles under the speed limit everywhere she goes.
Yeah.
Carly, something people don't want to hear is that building codes actually were written to require insulation and or vapor retards that would promote mold growth from 2009 to 2012. Mold is a huge insurance claim cause, and it's awfully complicated to assess the mold growth risk. I have been billable thousands of hours doing hygrothermal analysis for envelope assemblies to assess this risk for years. Damn. So she knows way more about mold than we do.
That's great. And like there's so many. I could sit here for the next 3 months and play what if games on insurance in like every situation, and it's very difficult. The thing that I work really hard to do is setting up with the best coverage for the situation. But
you hedge risk.
Right.
That's what your job
is.
Exactly. Yeah.
And then there's always adjusters with every insurance company, and their job is to interpret the law and the situation, and it's their say. So. You can get insurance for literally every situation, but most people aren't willing to pay that money for everything. So it is finding the right balance between the coverages that are going to most affect you, finding the right company and the carrier for the coverages that you want, and then finding it for the price that's affordable.
We'll close on this, and then closing thoughts for both you guys here. Roger in Pensacola has got another comment. Roger, I love when you watch the show, my friend. He says Tesla is now offering its own insurance in Virginia, and the Tesla app monitors all driving to evaluate if the driver qualifies for the lower Tesla rate. Roger was the first guy in Charlottesville with a Tesla.
Wow.
Yeah, he is a huge Tesla fan. One day, Roger, we need to get you on the show to talk about the private equity, the REITs that you're investing through. He's investing with these companies through a fund where he's actually an owner of the property, but he's not on the paper and doesn't have to worry about the maintenance. He's a huge proponent of that. Roger, I'll reach out to you. Show is yours. Gentlemen, anywhere you want to go on any topic. Taylor, you want to start?
Sure. It's still tough out there. The inventory is low. The rates are high. Cash is king. Keeping a positive mindset, understanding what you're buying, and this is hard for first-time home buyers, but probably the most necessary for first-time home buyers. View your home as a good, an investment, and be dispassionate about the transaction. It's about positioning yourself at that time. It's not about finding your dream home at 22. Mm-hmm. You can't afford it anymore, especially if we upzone and all of the HOA communities their prices get driven up and then your insurance goes up 2x, like Jeremy said. So view it as an investment, find the right choice to propel yourself to the next thing, and try to stay dispassionate about the transaction.
Great advice.
My best.
Jeremy, show is yours. Roger says it's a real estate IRA, and Roger would love to talk about the real estate IRA anytime. Show is yours.
Yeah, I just wanted to say too that working with all the different professionals that I have within real estate, mortgage lending, everyone in our industry, other really good insurance agents that are out there, when it comes to these transactions, by and large, everyone wants the best for everyone else to be the outcome of the situation. I think sometimes it's a fear that there's like a standoff that's going on between the buyers and the sellers, when really everyone wants everything to work out and to go smoothly for the most part. I mean, there's some.
Your agent is not your enemy when he's telling you the truth.
Right. Yeah. The agents, the sellers want the homes to sell. The sellers want to sell the homes. Buyers want to buy the homes, and the buyers' agents want to help them buy the home. Everyone's working together for the collective good. And I think, if we remind ourselves of that as we're going through this, it makes it a little bit less scary.
Yeah.
And that's really what we all want at the end of the day. Also wanted to give a shout out and congratulations to both the UVA men's lacrosse team and the UVA men's golf team for wrapping up fantastic seasons. I think they were really good, and best of luck to the UVA men's baseball team as they get ready, hosting some big games coming up. Number 4 overall seed, so we'll get both a regional and then hopefully hosting the super regional as well.
A regional in Charlottesville, we love that. The lacrosse team, Final Four, tough loss to Notre Dame. Golf team, better than it's ever been. We are truly lucky, and I'm saying this not just as someone who bleeds orange and blue, but besides football, we have one of the best athletic departments in the country.
We do.
Yeah.
I mean, and a lot of people don't realize that, and I understand because we get caught up in football and men's basketball, but the Olympic sports, the non-revenue sports, are legitimately some of the best in the country, and we should take advantage of it.
I think
That was
they're
great.
second only to the University of North Carolina.
Oh, we got a Tar Heel, Taylor Averitte. You want to handle that, or should I turn his mic off? Is that what you want me to do?
The national championships that UVA is ranking up is exponentially increasing with North Carolina, so they might be looking.
I'll send you a
we
photo
might
of the
be looking
banners.
at UNC in the rearview mirror.
I'll send you a
here
picture of
very
the banners.
soon.
Your boy Caleb Love. What happened to him? Couldn't get into Michigan. Ended
yeah.
up at Arizona.
Is it
But
Arizona now?
he didn't have the credentials. Is that what it was?
Well,
Michigan,
Michigan,
Rashad McCants all over again?
Michigan won't let fourth
I'm
year
very
transfers
quiet.
in, right? Is that right? Michigan won't let fourth. It's not about Caleb Love. It's happened to multiple people. You know?
He's right. Caleb Love now.
Caleb,
with
we thank you
Yeah.
for your Final Four shot. Best of luck wherever you are.
He's at Arizona.
Yeah, Arizona.
Yeah,
That's
Arizona.
right.
Yeah. J-Dubs, thank you. Judah Wickhauer, the director. Taylor Averitte, I'm going to call him the best dressed guy in car, the second tallest guy in car. Jeremy has got multiple people on the network here giving him props. I hope
Yeah.
you come back.
Thank you.
Jeremy
Thank
killed
you.
it.
And
You did
next
kill it.
time, let me know if it's a blazer day. I did not wear my blazer.
You look
so
sharp.
Thank you, everyone. Appreciate it.
You look sharp. Thank you, Judah. The I Love CVille show, guys, is up in approximately 45 minutes. We'll talk to you then. Take care, everyone.
Thank you.
Fellas, that was awesome. Very well
It
done.
was a lot of fun.
Thank you.
Yeah, so easy, right?
Yeah. I could easily do a UVA sports talk show if you wanted to do that. I could kill 45 minutes. Very.